This is going to be a walkthrough for the Chapter 8 Foundational 15, which is essentially the practice for Chapter 8. Morganton Company makes one product and it provided the following information to help prepare the master budget. I'm going to read through all of this information just this once. Portions of it are applicable to each succeeding question. So A, the budgeted selling price per unit is $70. Budgeted unit sales for June, July, August, and September are 84,000 units in June, 10,000 units in July, 12,000 units in August, and 13,000 units in September. All sales are on credit, which means they go into and out of accounts receivable. 40% of credit sales are collected in the month of the sale and 60% in the following month. The ending finished goods inventory equals 20% of the following month's unit sales. The ending raw materials inventory equals 10% of the following month's raw materials production needs. Each unit of finished goods requires 5 pounds of raw materials. The raw materials cost is $2 per pound. 30% of raw materials purchases are paid for in the month of the purchase and 70% the following month. So that E is referring to accounts payable. The direct labor wage is $15 per hour. Each unit of finished goods requires 2 direct labor hours. The variable selling and administrative expense per unit sold is $1.80. The fixed selling and administrative expense per month is $60,000. Okay, so the first question is, what are the budgeted sales for July? So they want to know sales, but they want to know it in dollars, right? Because we've got it in units. So to get sales dollars, we would take the 10,000 units times the price per unit, which was in A, of $70. Question 2, what are the expected cash collections for July? Well, if you'll recall, in B, 40% of the credit sales are collected in the month of the sale and 60% in the following month. So I have the 40%, I have the 60%, I have my $70 price per unit, and I have my units for each month. And they just want to know for July. So I'm going to figure out the sales for June, which is the 8,400 units times the $70. And then July, the 10,000 units times the $70 price per unit. Okay. So essentially, in July, I'm going to collect June's month after and July's month of. So I'm going to equals, open parentheses, June sales times the month after of 60%, close parentheses, plus July, whoops, I forgot to open parentheses, hold on. Open parentheses plus July sales times the month of percent, which is 40%, close parentheses, and that gives me total cash collections for July. So then what is the accounts receivable balance at the end of July? Well, in June, we collected 40% of June's, and then in July, we collected the rest of it, the 60%, and we collected 40% of July's in the month of. So all that is left in accounts receivable is that 60% for the month after. So that's going to be July sales times 60%. Question 4, required production. Okay, according to the production budget, how many units should be produced in July? Well, let's see. They told me in C, the ending finished goods inventory equals 20% of the following month's unit sales. So I have my little production budget labels here. And for June, I'm just going to figure out the desired ending finished goods. So that's going to be the 10,000 July times the 20%, right? That's my desired ending finished goods. That's what was given in C. And then for July, I'm going to do the same thing, but it's going to be August times 20%. And again, this question, we're talking about units because this is a production budget. So everything is in units. So they just want to know about July. What do we need to produce in July? So my total needs will be the 10,000 budgeted plus the desired ending finished goods. And now I need to minus my beginning finished goods. And we find that over here in June. That's why I figured this out, because the ending balance for June becomes the beginning balance for July. So then I take my total needs minus my beginning finished goods equals 10,400 units. Question 5. Now, if 61,000 pounds of raw materials are needed to meet production in August, so required for production, 61,000. How many pounds of raw materials should be purchased in July? So, remember how to do this one. Oh, that's right. I was like, where did that number come from? So this number right here, this 10,400 units equals, it's from question 4. It was my answer to question 4. So, and in, let's see. So right here in D, they told me the ending raw materials inventory equals 10%. There's my 10% of the following month's raw materials production needs. Each unit of finished goods requires 5 pounds of raw materials. So raw materials per unit is 5 pounds. And I don't need to know yet the cost per pound, but I will in the next questions because they just want to know this in pounds. How many pounds of raw materials do I need to purchase? So pounds per unit are 5 pounds. So I need 10,400 units times 5 pounds. So for July production, I need 5,200. The desired units of ending raw materials is again 10% of the following month raw material production needs, which they gave me that number right there, right? In question 5. So I just need to take that number times 10% to get my desired ending. So equals the 5,200 plus the 6,100. And then I need to subtract the beginning. So I know this is going to confuse some people, but essentially the beginning is going to be June's ending, right? And they want ending to be 10% of the following month's raw production needs. So it's going to be July's needs times 10% equals the beginning. So I subtract, take the need minus what I already have on hand, and that gives me how much to be purchased is 52,900 pounds. Okay, so then in question 6, they want to know, same thing, but they want to know what's the cost of the raw materials to be purchased. So again, that's going to be the answer from question 5 was 52,900 pounds. And my cost per pound was found in D right there at the end, $2 per pound. So I simply take the pounds to be purchased times $2 a pound. Okay, question 7. In July, what are the total estimated cash disbursements, which means payments, for the raw materials purchases? Assume the cost of raw materials purchased in June was 88,880. So 8880. Okay. And then we figured out July's cost of purchases in question 6. So this is, so cash disbursements just means what part of my accounts payable am I going to pay off? And let's see, in E, they told me 30% of raw materials purchases are paid for in the month of purchase. So I put that there. And 70% in the following month. So I put that there. So essentially, what did they ask me? They want to know what am I paying off in July? What are my cash disbursements? So that is going to be the month following for June and the month of for July. So I'm going to go equals, open parentheses, June's cost, which was given, times the month following percent, which is 70%, plus, open parentheses, July that we figured out in question 6, times the month of that 30%, close parentheses. Okay. So same thing, 61,000 pounds are needed in August. What is the estimated accounts payable balance at the end of July? So these are those same numbers, the cost of raw materials for June and July. And again, accounts payable, that's just what's left to pay of July, which would be the 70% the month following. So equals July's cost times 70%. Question 9, same thing, 61,000 pounds of raw material. What is the estimated raw materials inventory balance at the end of July? So raw materials needed for August was 61,000, right? They told me that. And my ending raw materials inventory, they told me that in D, they wanted it to be 10% of the following month's production, raw materials production needs. So again, I'm just in pounds right now. So it's the 61,000 pounds times the 10%. But this answer needs to be in dollars. So again, my raw materials cost per pound was given in D as $2 a pound. So I'm going to take the ending raw materials inventory times the $2 per pound. Okay, question 10. What is the total estimated direct labor cost for July? So if you remember clear back in question 4, my required production units was 10,400 units. So to figure out what my direct labor cost is, I need to take my units times how many hours it takes per unit, which they told me in, let's see, in F. They told me it's 2 direct labor hours per unit and I'm paying $15 an hour. So 2 times the units gives me to hours, and then times it by the labor wage per hour gets me to my direct labor cost. So I went from units to hours to dollars, all in one cell. Okay. Question 11. If we assume there is no fixed manufacturing overhead and the variable manufacturing overhead is $10 per direct labor hour, what is the estimated unit product cost? So if you'll recall, I got the 5 pounds per unit from D. I got my $2 a pound also from D. My wage I got from F, $15 an hour, and 2 hours per unit. And then they just told me variable manufacturing overhead is $10. So my direct materials will be, and this is per unit again. So direct materials are going to be the 5 pounds per unit times $2 a pound. My direct labor is going to be $15 an hour times 2 hours per unit. And then my variable manufacturing overhead, they told me was $10, and it's based on direct labor hours. So that's $2 per 2 hours per unit. So add those up and I get $60 unit product cost. Okay, 12. So again, same thing that they want to know now, what is the estimated finished goods inventory balance, which means in dollars, at the end of July. So if you remember, okay, so we just figured out each unit costs $60 to make. That's the answer from question 11. And the ending finished goods is C. It's going to be 20% of the following month's unit sales. So I just need to figure out July, which would be August times 20%. Then I need to get this into dollars, right? Because I'm in units right here. So I need to take 2,400 units times the cost of $60 per unit. So there's my ending finished goods inventory balance. Question 13. So again, they told me I'm doing, let's see, same thing, but now they want to know the estimated cost of goods sold and gross margin for July. So I needed my selling price, which they told me at the beginning. I have my cost per unit, which is the answer from question 11. So with those two pieces of information and my budgeted unit sales, my estimated cost of goods sold for July will be the 10,000 units times the cost per unit. And then my gross margin is going to equal my selling price times my budgeted units for July, close parentheses, minus my cost of goods sold. So that's what gross margin is the sales minus cost of goods sold equals gross margin. Okay, question 14. What is the estimated total selling and administrative expense for July? So they told me in G, the variable administrative expense per unit sold is $1.80, and the fixed selling and administrative expense per month is $60,000. And they want to know July. So I need to take equals open parentheses, the variable cost times July's units, close parentheses, plus the fixed. So variable plus fixed equals total selling and administrative costs. And the final question, question 15. What is my net operating income? So I know my cost of goods sold because I figured that out in question 13. And I know my selling administrative expenses because I figured that out in question 14. So my sales are the 70 times the 10,000 units in July. My gross margin then equals sales minus cost of goods sold. And then my net operating income equals my gross margin minus my selling and administrative expenses. I have a net operating income of $22,000.